As important as it is to have something in savings, growing an account from zero is definitely easier said than done, especially since nowadays everything seems to be more expensive. Plus, life is not always kind to us, so many things can throw us off. But regardless of the circumstances, we really can't afford to be without any type of savings. So today I'm putting myself in the shoes of many people and I'm breaking down exactly what I would do if I had nothing or very little saved. But before jumping in, this video is brought to you by Credit Sesame, which is a resource that can help you reach many of your goals and become financially stable. And they're widely known for offering free credit scores, but in addition, you can also receive personalized tips and recommendations to help improve your score, which can be useful when buying a house or car, when renting an apartment, and even when getting your first credit card and insurance rates. In addition, Credit Sesame also has a free online debit account called Sesame Cash, which we will talk more about in a moment. If possible, the first thing I would do if I had nothing saved is see if I could take advantage of any skip payment options. This option might be available if you have an auto loan or maybe a personal loan, and basically this is how it works. The lender allows you to skip your payment for a particular month without penalty, meaning you're not charged a late fee and skipping the payment doesn't affect your credit. And to compensate, the lender will then extend your loan term by an additional month. Not all financial institutions offer this provision, and I didn't even know this was an option until I got an auto loan through a credit union years ago. It was around the holiday season, and I received a flyer in the mail from my lender saying that I could skip my payment. And when I called to get more information, I was told that they offered this provision every December. And in addition to their annual holiday skip payment arrangement, I could also skip my payment up to a maximum of 2 additional times throughout my entire term. Now, the skip payment did not apply to mortgages. It only applied to certain loans, such as auto loans and personal loans, and interest did continue to accrue. Even so, if you have nothing in savings, utilizing an option like this and then putting the money into savings can give your account a boost. And I did a little digging and found that some auto finance companies also allow skip payments. So if you have a loan, it doesn't hurt to give your lender a call and see if this is an option. I would also take full advantage of any cashback reward programs through my bank or credit cards. I am a big fan of cards that earn rewards. There will always be things that we have to buy, such as food, gas, household items, clothes, etc. And if you're going to spend money, I feel that it only makes sense to get something back in return. Now, these programs do vary, but sometimes there is an option to get cash, and if so, you can have your rewards deposited directly into your bank account or you can get a check. I have a rewards card that earns cash, and with this particular card, it's an annual reward. So each year, I'll receive a check from them, which I could then use to build my savings. Now, if you don't have a debit or credit account that earns rewards, one option is applying for Sesame Cash, which is a no-fee debit account that helps improve your credit, and it lets you earn cash rewards when your score increases. When you pay for items with your Sesame Cash card, you can get instant cash back on qualifying purchases. In addition, the money you already have in your account and your daily debit purchases can build your credit history. So you're able to receive the credit building benefits of a credit card while using a debit card. And that's without a credit check, fees, or interest. If you're interested, I will include a link below so you can sign up for a free Credit Sesame account and start using Sesame Cash. In addition, I would also reduce my retirement contribution. And to be abundantly clear, this is a temporary reduction. And I know some people might not agree with this or feel that it's too risky, but hear me out. Saving for the future is important, no question about it. And the earlier you start, the bigger your nest egg. But it's also important to have something liquid for emergencies, because a savings account is one of your best weapons against credit card debt. I've heard of situations where a person would have a good sized retirement savings, yet they didn't have enough money in the bank to handle a real emergency like a job loss. Even though you might be able to use your retirement savings for an emergency, this is not always the best option, because depending on the circumstances, you could get hit with taxes and penalties. So an actual emergency fund is your best bet. And if you're struggling to save one, reducing your retirement contributions on a temporary basis could free up the money that you need to build one. Another thing I would do is take advantage of any month that has 5 weeks. Now, this will only work if you're paid hourly or you're paid weekly, because about 4 times a year, there will be a month that has 5 weeks, which means extra money on your check. Like most people, your budget is likely based on 4 weeks of pay. So when you receive an extra week of pay, that's pretty much cash that you can use for anything. Now, there's nothing wrong with having fun with your extra money, but this is also a great opportunity to get ahead. Because if you bring home $700 a week and you're receiving 4 extra checks this year, by the end of the year, that's $2,800 in your savings account without even trying. I would also have a mega sale. I read that most people will use 20% of the things that they own 80% of the time. So in a lot of our houses, there are probably items that we haven't used in years and probably things that we will never use again. This can be clothes, toys, home decor, appliances, and a lot of these items can be in good condition, yet they're only taking up space and collecting dust. So one thing I suggest is going through your home from top to bottom and looking for any item that you can possibly sell and get cash for. If you have a house, you can plan a big yard sale, and if not, you can look into selling these items online. But whatever you do, commit to saving the money that you make. You might be surprised by how much you can get for your used items, especially if you have furniture, electronics, or designer brands. And even if you're only able to make a few $100s, that's more money in savings than you had the day before. I would also start a side hustle, and more specifically, I would start a hustle where I could earn passive income. I am such a big fan of passive income because there are only but so many hours in the day. So if you work a full-time job and you leave that job and you go to another job for 4 hours, you might not be able to keep up with that pace long term. So if you don't have an immediate need for extra cash, I do recommend looking outside of a traditional job where there's often more flexibility and greater earning potential. Because whereas it might take 4 or 5 hours to make $50 at an actual job, you can possibly earn this or more per day while only working 3 or 4 hours a week with maybe affiliate marketing, a digital product, YouTube, or blogging. I would also make it a point to track every dime I spent. Now, some people are unable to save because their income isn't enough to keep up with their basic expenses. But other times, an inability to save is directly related to overspending. And the thing about overspending is that it happens gradually and it can also be very subtle. So you might honestly believe that you don't have nothing left to save. However, tracking your spending and budgeting is great for pinpointing whether you have an income problem or a spending problem. And this is also key to finding money leaks in your budget. And one thing that might help is to write a list of every single want that you have spent money on in the past month. And this can include eating out, entertainment, rec, self-care. And writing it out is so helpful because you don't want to guesstimate these expenses. I feel this is where a lot of people get themselves into trouble because they might think that they're only spending $100 a month eating out, yet it could be closer to $200 a month. So you want to have an actual number. Now, I'm not going to tell you to cut out all fun because honestly, I don't think that's realistic or sustainable. But what I will suggest, and this is what I would do too, is take a look at how much you're currently spending on wants throughout the month and then cut that number in half and then pay yourself the other half. I would also start negotiating and shopping around to see if I could get a lower price on certain monthly expenses. Now, this will not work for every bill, but it might work for your insurance, such as your auto insurance or maybe your home insurance. And if you have internet, cable, phone, or even a security system, you can also contact your provider and let them know that you're thinking about switching, and then ask if you can get a lower rate. When we did this with our cable provider years ago, it worked and we were able to get an on-the-spot reduction. And the discounts might not seem like a lot, but an extra $50 a month does add up, and that's an extra $600 a year in your savings. And finally, I would start automating my savings every single week, no matter what. Even if I was only able to start with $10, I would set it up where money would transfer from my checking account to my savings account on a certain day each week. It's one thing to say that we're going to save a certain amount every week, but it's another thing to actually do this. And even when we have good intentions, sometimes we forget to transfer the money. It takes discipline, and a lot of people struggle with this. So, my recommendation is to take yourself out of the equation and automate your savings. Now, everyone's experience is different, but when I did this, I didn't even miss the money coming out of my account. And honestly, had the money stayed in my checking, I probably would have spent it on things that didn't even matter. That's all that I have for you guys today. Thank you for watching. I really hope that you enjoyed this video. And if you did, please give me a thumbs up. And if you haven't already, definitely consider subscribing. I talk a lot about personal finance. So if you like videos like this, I do post every weekend and sometimes during the week. Thank you again for watching, and I'll see you in a few days.